on the OGN buyback campaign. So we started this campaign at the beginning of July. So you can see we did do some buybacks in the past. We bought back around 10 million OGN, but it really started kicking up in July. And that's when we started routing all of our protocol fees to buying back OGN off of the open market to fund staking rewards. So at the beginning of July, we had about 10 million OGN bought back. Now we're up to 27.6 million. So that represents 4.2% of the circulating supply so far. And if you annualize that, then about 45 million OGN will be bought back over the course of 12 months. So this has been ticking up pretty nicely. We also have a alerts account on X if you guys want to follow along in real time. That account is at OGN_alerts, and it gives you guys notifications whenever a buyback happens on chain, as well as whenever a major stake happens on chain. So you can follow along by adding that OGN alerts account to your timeline. Let's take a quick look at protocol revenue. So this is the revenue generated by all of Origin's products. It is broken down by the product type. Let's go look at 6 months now. Is ticking up. A lot of our TVL is denominated in Ethereum. So as Ether goes up, our protocol revenue has also gone up. We've made about $8.5 million over the past 180 days. So pretty strong revenue so far. And let's take a look and see how this is broken down by product. So you might notice this pink part of the bar graph kind of shifts around. Sometimes it's really big, sometimes you can barely see it. That is from the ARM. So the ARM arbitrages staked ETH. We'll talk about that more later on in the call. But APYs can be volatile. We can see that it does earn a lot of fees on specific days when staked ETH is volatile. When staked ETH is really tight to peg, it doesn't always earn protocol revenue. So that's when you see the spikes. You can see like here, revenue spiked at the end of July. That was from the ARM. Let's go to a typical day. Let's just go to like yesterday here, 30-day moving average around $67,000 per day in protocol revenue. And you can see the majority of that is from Origin Ether. That's our flagship LST. It has quite a bit of TVL now. I want to say right around 200 million. And then the other big revenue generator we're seeing right now is Super ETH on Base. And we have some product developments there as well we'll talk about. But you can see we have a bunch of different products directing protocol revenue to OGN, and you can track that all at originprotocol.com/OGN. If you guys want to stake, you can stake directly on our dApp from 1 month to a year to earn that maximum APY of around 50%. Then you'll need to stake for a year. But even if you're only staking for 1 month, you're earning somewhere around 30 to 35% APY. So really strong rewards without any new token emissions, all coming from protocol fees. We are listed on pretty much every big centralized exchange as well. So if you use Coinbase, Binance, Kraken, any of these exchanges listed here, you can buy OGN there, or you can go to a liquidity pool. We're on Uniswap, we're on Curve, you know the deal. So that's the overview for today of OGN. Let's go ahead and take a look at a few protocol developments before we bring on ETH strategy. So I want to start off with Sonic. We have a couple developments here. Ceres Farm has added a new smart vault for Origin Sonic, so you can earn yield on your OS. I believe this is routed to the Metropolis DEX, so it's a liquidity strategy. I believe they also have incentives. So go ahead, check out Ceres Farm. If you hold Origin Sonic, this is a new way to earn yield there. We also have one other development on Sonic, which I'll touch on briefly. Fly Trade has integrated the OS ARM. So the OS ARM is, sorry about my dog, the OS ARM arbitrages OS in the same way the staked ETH ARM arbitrages staked ETH. This is on Sonic, and now it's integrated with Fly Trade, a big DEX aggregator. So now we're able to win more trades for OS through being integrated with Fly Trade, and traders that use Fly Trade are able to get better rates because it will be routed through Origin's ARM whenever the rates are most competitive. And then probably our biggest announcement this week, I'll save some of this for our alpha section, but I do want to shout it out now for those of you listening. We launched Borrow Booster. So we have this yield forwarding feature that makes yield programmable. So what that means is that yield from an LST, in this case Super ETH, can be used to direct yield to different smart contracts. So typically, a lot of smart contracts do not support rebasing. So it is either held idle or you need to use a wrapped version of the token in smart contracts. So this uses vanilla Super ETH. It routes yield to Morpho to incentivize borrow rates. So if you're looking to leverage ETH, you can do so with Super ETH, take out a USDC loan, and then your borrow rate is very low. Right now, it's actually negative, so you can get paid to borrow USDC. So it's a really effective leverage strategy. We'll dive more into it later on in this call, but that's sort of the gist. Right now, it's around negative 11% borrow APY, so you can leverage and get paid like 11% APY right now from it, even with quite high utilization. So if you want to learn more, go ahead, check out our timeline. We have more information in this thread, and we'll check out that Morpho market maybe later on in this call. But let me stop sharing my screen. We're going to bring up ETH strategy. We're going to chat about digital asset treasuries and specifically what ETH strategy is doing. So let me welcome Clout to the stage. Oh, sorry. I'll let my producer handle it. Thank you, Ziad. Hey, Clout, how are you?
GM. Hey, Ryan. Thanks for having me.
Absolutely. Thanks for joining us. So would you like to start off by just giving an overview of your role at ETH strategy and maybe what ETH strategy is and why users may be interested in exploring it?
Yeah, definitely. So in terms of roles, it's a hard question. Kind of everyone does everything at this stage of the startup, but definitely more focused on growth, BD, and a little bit on the financial engineering side of things. Yeah, that's about it from me. And in terms of what ETH strategy is, so my usual go-to explanation is that it is the protocolized implementation of what Michael Saylor has done with MSTR. To get a little bit deeper into that, it's kind of just like it is rebuilt from first DeFi principles, but it's essentially a protocol that is a treasury that aims to amass as much ETH as possible, and have this value of ETH that it amasses felt by the holders of the token of the treasury, which is strat holders, in the best way possible through accretive dilution, which is aiming to outperform any sort of yield or fees that you could get doing anything else with ETH. That's basically the overview of the protocol.
Okay, let me share my screen. I pulled up your website. We can maybe go through some of this. So you're tracking your treasury holdings right now around 12.2K ETH and strat price right here around 75 cents with a market cap of $88 million. So you have quite a sizable treasury already for being a relatively new protocol. When did you guys launch?
Yeah, so we started about a couple months ago. The whole thing was an idea in January. Over the couple months post that, it got built out, had some market validation and BD done with an initial kind of pipe raise for Strat at a really good rate for like initial community. We raised about 6,900 ETH privately, and then we raised 1,240 ETH publicly. Because we believe in democratized access to protocols and whatnot. So we always do a public sale. And then that was the last time you could kind of buy Strat at a certain rate with ETH. The rest was kind of like locked away, and now it's only through LPs. Official launch, I would say, like the Strat token launched on the 29th of July. And the protocol is in a phased rollout. So as we speak, over the last couple months, we've already rolled out like another side of the protocol, which is what we call the bonding side of it, and we will continue to roll out the rest of the protocol's functions.
Awesome. So let me launch the dApp here, and I assume we'll probably be able to see what the treasury is doing. Maybe you can direct me around. I see you can track treasury purchases here. It looks like you guys have made some good acquisitions. But I believe a lot of the treasury is in yield-bearing ETH. Is that correct?
Yeah, we've basically staked most of our treasury, yeah, we kind of cast a net to all the great staking protocols, including Origin. So actually, I do want to take a moment to shout out the Origin team. They're actually friends of our teams, and they actually participated in the private 6,900 ETH pre-sale that we were talking about previously. So Origin have been supporters early on, and we're happy to support them. And we've allocated to OETH, and looking to potentially allocate to some of their other products, like their ARM products. So yeah, that's definitely a portion of our treasury there, and the rest of our treasury is in some of the other great staking protocols that have contributed to Ethereum too.
So is your treasury primarily made up of liquid staking tokens, or do you guys also support native staking or other ETH-based yield strategies in DeFi?
So as it stands, it's primarily made up of liquid staking tokens. And that's just because it's very easy for us to have those receipts on chain. Everything is completely transparently on chain. Our addresses are in our documentation, so people can always go and review our treasury. But we do actually have a key partnership with a node operator, Peer2. They're very close to us too. So in the future, there is opportunity and interest from us to potentially run our own validators and in partnership with Peer2.
Very cool. Is there a way I can check out the treasury holdings from the DApp, or is that elsewhere?
Not yet from the DApp. Probably the best way is to go to the main website and go to the Git books and find the treasury address. But the DApp there's still a bunch of wiring that needs to be done. Everything is at 1,000 miles an hour, so definitely been banging the heads of our UX guys and front end guys to kind of wire up a little bit faster. A lot of our focus has been on that ESPN tab at the top there, if you see it. So that's the product that we just put out most recently.
Not
It's
yet available in the US, but are we getting there? What's the plan there?
yeah, we are getting there. I think that's a bug from your side, Ryan. I mean,
Oh,
there
okay.
shouldn't be anything stopping you from accessing these things. But yeah, no, we're getting there. ESPN is actually one side of our protocol that is more USD focused. So part of ETH strategy is that strat holders can get extra ETH value by getting non-liquidatable leverage. The way that this non-liquidatable leverage gets into the system is that USD lenders give their USD to ETH strategy to buy ETH on very favorable terms. So they have a 4-year time frame where they cannot take back that debt, and that's essentially pushing liquidation risk over a very long time, which is a new kind of primitive in DeFi. And in return for that debt, they don't get an interest rate either, so we don't actually pay any funding. What they get is they get an option they get a conversion right to be able to convert their debt instead of getting their principal back plus 0% interest in our case. They get to convert their principal to our strat token. And why would they do that? Well, there's two reasons. The first reason is, at the end of their loan, if ETH goes up, which we all hope it does, it actually makes rational economic sense for them to convert to Strat instead of getting back their principal in USD terms, because USD would have been, a little bit more worthless over the next 4 years. But Strat, as it's fully backed by ETH, would have been significantly higher. So they would have been well in the money on that conversion rate. And the second reason is actually what ESPN is based around, is because when you have this option, it allows you to do a specific type of trade that you're not able to do in any other type of place in DeFi. When you hold a long dated option on ETH in this scenario, you're able to go and actually sell a whole bunch of short dated options over and over and over again. We call that kind of like a calendar spread. And what this does is every time you sell those short dated options, you're just booking these premiums, and you're completely delta neutral because you're holding a long option, a long call, and you're selling a bunch of calls, so you're short calls, and you are completely delta neutral in USD terms, and you're making yield the whole way through. So whilst you don't get paid an explicit interest rate on the loan that you've given, you get given the chance to make a very high yield by being able to take out this trade. And ESPN is actually a vault that automates that trade for USD people. And that's the product that we've been pushing out recently. And all that USD that goes into ESPN obviously goes towards buying ETH for strat holders and increasing their ETH per strat, which is what everyone wants.
That's pretty interesting. So the USDC liquidity that's routed through ESPN gives strat holders more upside, gives you guys the opportunity to acquire more ETH. And then users of ESPN, they're lending USDC, but essentially don't have much downside. They can get exposure to ETH, but they could get paid back in their USDC if they want to, but they get that exposure through Strat. So 4 years down the line, when ETH is at $20,000, they can get Strat instead of USDC. If for some reason Ethereum goes down, they can get their USDC back. Is that essentially how it works?
At its core, yes. I will give one caveat. ESPN is a vault that automates that kind of that trade that I was talking about. And the one trade-off of using ESPN specifically is that you won't be able to claim the USDC back as it stands at the end of the term. What you're getting is the yield all the way along the way, and then you can sell your vault tokens and get your principal back. So it's a bit different on the way you claim your principal back, but at the core protocol level, which we haven't actually released yet, because like I said, we're phasing out our protocol. If you do buy the bonds directly from the protocol, that's exactly the way it works. Yes.
Okay, and you guys plan to launch with USDC. Do you guys plan to expand the types of stable coins that are accepted through ESPN, or are you primarily focused on USDC lending?
Yeah, so it's actually USDS in ESPN.
Okay,
We don't plan on expanding the stablecoin that's used in the system. It'll probably remain USDS. But in terms of abstraction from a front end perspective, we'll probably implement something that it doesn't matter what you put in, but it will be USDS in the system. I think that's just because our team is a kind of like a very OG team that like biasly leans on kind of Maker and Sky. But other than that, yeah.
makes sense. Very cool. All right, so I want to talk a little bit more about ETH Strategy's actual treasury. You mentioned that it's primarily allocated to liquid staking tokens. What liquid staking tokens make up the treasury assets right now?
Yeah, definitely. So we're fortunate to have a lot of friends in the space, partners and protocols that we've met over the years and teams that we know. The primary LSTs that are currently held by eStrategy involve EtherFi and Lido and Liquid Collective, Rocket Pool, Origin. Um, and a smaller tail of some others like Dinero and a few others that don't come to mind right now, but I can pull them up in 2 seconds if you give me one moment. Um, and Renzo, and we've got a bit of Fluid there too, and we have some in Aave, which is mainly just there to be waiting to be allocated to kind of a higher yielding strategy. So yeah, that's the gist of it.
Makes sense. And how do you guys choose the weight of each asset in the treasury? Is it pretty evenly distributed right now? And do you guys rebalance actively, or is it a more passive strategy?
Yeah, so in terms of treasury allocation, we threw the net in a way that certain team, like for us, the most important thing at this stage of our protocol is distribution and kind of assistance with getting TVL into the protocol. So when talking to a lot of the LSTs that we know, different ones offer different kind of value back to us. We actually don't prioritize yield. So um, whilst we love yield, a few basis points difference is not what is going to sell our protocol as a startup. What we really want to focus on is value in terms of, how it can help with distribution and whatnot. So some of these partners were selected because conversations did involve like marketing distributions or introductions to more TradFi native type of players that also are very tight with these or different types of angles like this. And we also wanted to support a bunch that we know. So we threw a very wide net. I think that as a team, we're not too focused on being very pedantic on managing this treasury as it stands. We're focused on scaling our protocol and really getting more distribution, more users, and bringing value back to both Strat and ESPN. As it moves forward and we acquire more and more ETH through our bonding strategies and whatnot, and we actually have a little bit more size to also go with. We're going to probably retroactively revisit, see which staking providers have given good value in the directions that we want, and potentially reallocate accordingly. Potentially, I'm not like giving any hard yeses or nos on this call, but that's an idea that we have. Obviously, for us, it's important to be aligned, and whichever protocols can provide a lot of value to us with what's important to us, we're happy to support more. Origin, for example, they supported us from day one, so I think that we're going to support them continuing moving forward, of course.
Much appreciated. And yeah, I think your point on like APY not being like the number one key driver of decision making is pretty interesting, because like when you think of retail's perspective, a lot of times capital just flies to whatever is yielding the highest. You know, last year that was restaking. We saw yields in the double digits. And now we're seeing a lot of different opportunities, say on like Pendle. So APY is like top of mind for a lot of people. But when it comes to institutions and people that are allocating with size, that's not always the number one concern. Like obviously security is going to be probably most important, but also exit rates are super important. And that's one thing Origin prides itself on, is Origin Ether and Super ETH are super, super easy to get out of. Like pretty much every LST is really easy to get into. You can just swap 1-to-1. But we're seeing right now, like even with Lido, its withdrawal queue is really long. And then if you want to swap on a DEX, then you're getting some slippage on that position, especially when you're trading with size. So it's something that we've definitely been focused on, and we're really proud to have the lowest slippage at up to, I think, either 1 or 5,000 OETH. So we have really, really good on-chain liquidity. Some of that comes from our ARM product, which I know you mentioned you're exploring as well. But I think it's just kind of cool to think about these different perspectives that aren't just, you know, based on APY, but based on how easy it is to get into and out of, as well as security and all these other considerations that, you know, big allocators typically review before aping into a certain LST.
Definitely. I think it's funny because when you're at large size, the little basis points actually matter.
Yep.
But yeah, other things always matter more, including security, including liquidity, and yeah. So I totally agree with that.
Awesome. Well, I want to talk about your roadmap, maybe what you're most excited for. I know we already went over ESPN, but this live stream is called Alpha Access. So I want to drop a little bit of alpha. I'm personally going to talk about our Morpho market here in a couple minutes, but Clout, I wanted to give you the opportunity to talk about what's coming up for ETH strategy, how people can get involved, and what you're most excited for.
Yeah, definitely. Thanks. So I mean, quick roadmap. I think there's 3 things I'm excited about. Firstly, scaling ESPN. I think that ESPN could become quite an interesting type of product in DeFi. I kind of position it as like a massive yield booster, because it's a product that has really high yield, but has a little bit of a trade-off on kind of redemption ability and whatnot. So it's a weird product that usually it's not something that funds, vault curators, protocols cannot allocate large percentages to, but they can allocate small percentages to that will significantly impact their yields. So I think it's going to be interesting to see how, as the TVL increases in ESPN, which has done really great so far in the first 3 weeks of operation, we're nearing 3 mil in TVL. And I think as the TVL increases, it's going to be interesting to see its integrations in further DeFi. That's one thing I'm excited for. Secondly, we're going to bring some utility to Strat itself. I guess this is the alpha part. It's not 100% leaked in any way or fully discussed, but unlike, you know, our TradFi friends, there's not much you can do if you're stuck other than hold it. Because, you know, you're sitting in a brokerage account that you don't really have the keys to, and there's no cool DeFi ecosystem around it. But we don't have that problem being fully on chain and being an asset like a token. So we're going to capitalize on that, and we're going to kind of try and bring some cool utility to Strat. Might be reminiscent of the autistic DeFi summer days, but yeah, we're gonna try and get Strat holders to have some fun and potentially make some value along the way by using their Strat as well. So that's kind of like the alpha that I want to leak is in our more nearer term roadmap too.
Sounds exciting. It sounds like you guys are working on composability. You know, maybe Strat holders will be able to get some leverage on their tokens, maybe use it in different yield strategies. Definitely stay tuned to future announcements to see what we can be doing with Strat in the near future. And I can't wait to have more conversations with you, Clout, in the future, especially as you guys explore more of Origin's products to allocate with your digital asset treasury. But thanks so much for joining. We're going to let you go. I'm going to talk a little bit more about this Morpho strategy, and then we're going to wrap up the call in just a few minutes. But thank you, Clout. Appreciate you joining.
Thanks, Ryan.
All right, alpha access, dropping some alpha. Let me go over to this Morpho market, share a strategy with you guys that just launched the other day, curated by Yearn Finance. So this is an opportunity on base that I'm really excited about right now. I talked about yield forwarding and borrow booster earlier on in this call, but let's check out the actual market, see what's happening. So we have a few markets right now with Super OETH on base. These two are wrapped Super OETH. So your Super OETH is growing in value as you post it as collateral. And then this is our new market, Super OETH B USDC, curated by Yearn. So this is the one that has negative 11% borrow rate. So you can see utilization right now is really high. And the native rate to borrow is right around 8%. But that Super ETH that's deposited as collateral in this market is using its yield to subsidize borrow rates. So you can see right now all that collateral is working to lower borrow rates. And even though the native borrow rate is at 8% APY, Super ETH is subsidizing that by 19%. So right now the net rate is negative 11%. That means if you're taking out USDC loans, you're earning 11% on your borrow. So really cool to see, makes looping super lucrative. And if you're looking to gain leverage on your ETH, this is a great market to do so. I believe we have more liquidity than this. I don't know if this is a UI problem. I checked this morning. I know Yearn allocated around $130,000 to this Morpho market. And it shows total borrows. This number is off, just needs updating. But total borrows is around 111,000. We just launched this, like I said, yesterday. So we're working on growing this liquidity. We're hoping next week we'll have more curators, more allocators on the supply side. Right now it's Yearn who's allocated. It shows here about $130,000 of USDC. But this is one I would definitely keep an eye on if you guys are looking to leverage your ETH, especially with negative borrow rates. I'm really curious to see where this levels out. When we launched the market, it was at negative 70%. So just like absolutely insane payment for taking out a loan, which you do not see very often. Hoping that this will be probably around 0%. Maybe it'll stay negative for a while. It really depends on how much leverage is being taken and the utilization rates. But for the time being, double-digit negative percentage rates right now on the Super ETH USDC market. Again, this is on base, curated by Yearn, powered by Morpho. Really great opportunity, something we've never seen before in DeFi, using this programmable yield to incentivize different markets. So yield forwarding right now is on Morpho for Borrow Booster. We also have Pool Booster. So this same idea works in liquidity pools to boost liquidity pool APY. A lot of deployments have been on Sonic, but we also have some on Curve, working on Aerodrome for Super ETH as well as OETH. So check out this market. You guys can go to app.morpho.org, filter by base, and then look up Super ETH. This market will come up. Stay tuned for more liquidity. We're going to make more announcements about this next week, but super happy to be collaborating with Yearn on this project. This is the first instance of Borrow Booster. There should be more in the future, but launched on Morpho, guys. Check this one out if you're looking to leverage up ETH. It's a great opportunity. All right, guys, see 360 of you here in the audience. Appreciate you all tuning in on this Friday. Have a great weekend. That is it for this episode of Alpha Access. We'll see you in 2 weeks. We did weekly streams for a little bit. We're going to bi-weekly so we can keep having really big updates for you guys, as well as stellar partners to talk to. But thought this was a great stream. We'll see you guys in 2 weeks. Have a great weekend, everybody. Peace out.